Good afternoon, and thank you for tuning into today's webinar. With us today is Lisa Sharrard, owner of U.S. Flood Solutions and Choice Flood Insurance. Lisa Sharrard has more than 30 years of experience working with flood insurance, from owning her own insurance agency and consulting firm to serving as the South Carolina NFIP Coordinator for SCDNR and Assistant NFIP Coordinator for North Carolina. She has refined her skills and institutional knowledge over the years by working for several agencies on the topic of insurance regulations and procedures. Lisa has served on several flood insurance related committees, and in May of 2018, she was appointed as a subject matter expert to FEMA's Technical Mapping Advisory Council Insurance Coverage Subcommittee. Today, Lisa will be discussing the hurricanes, flooding, and rain that have plagued the Carolinas recently, causing closing delays and other issues for realtors. She will help you to prepare yourself and your business with this flood insurance update so that you can answer your clients' questions and be the expert they need. And now I'm going to turn it over to you, Lisa.
Good afternoon. Welcome to the webinar today. We hope to share some information with you that you've not previously been exposed to. But what we want to talk about, begin with, is Hurricane Florence. Believe it or not, Hurricane Florence dumped 11.1 trillion gallons of water over the Carolinas in September. I think that's the first time I've ever seen an event cause this much rainfall. So as we go through today, we're going to have some of that in mind. But the most important thing is that if you have not registered for disaster assistance, please file for disaster assistance. You can decline it as you get into the process, but there is a registration window that has to be met. I think it's by the end of November. And you've got to file for the assistance in order to figure out what your needs are and what your shortcomings may be. They'll walk you through the process. I know that there are some assistance centers that are opening up where you can go table to table. I know there was one in Marion the other day. Pay attention to those things. And again, register for disaster assistance. You can always decline the assistance if later you figure out you don't need it. But this is really your one-stop shop to get access to Small Business Administration loans, repair money or repair assistance, things like that, as well as temporary housing. So please take advantage of this and write this number down. We're going to talk today about a couple things about the NFIP reauthorization map updates. You know, if you've got flooded property, what to do about those listings with flooded property, questions to ask, disclosures and repairs. All those things I think are relevant for what people are facing at this time frame. Number one, looking into the reauthorization, look into the future. You know, the program expires on November 30th of this month. The conventional wisdom is it's going to be kicked down the reauthorized for about 6 months, April time frame. Congress just doesn't have the ability to deal with the elections and everything else, you know, lame duck session potentially. And so they're really just probably going to just kick the can down the road till the spring. Unfortunately, it's not going to be a long-term reauthorization, but hopefully next year after the election, we will have a long-term reauthorization, either 3 or 5 years. FEMA is looking at completely revising their rates. They're looking at how their current rate structure is. The NFIP is 50 years old this year. In August, it turned 50. And they're really looking at how their rates are structured. Right now, if you live in a 1,000 square foot house built in 1950 or a 2,200 square foot house built in 2000, you pay the same rate, regardless of the size house or the year it was built. So the current system, you know, we're getting bigger houses, and the current system overcharges those smaller homes that were built in the 50s, 60s, that were built really pre-firm. So the new rates are going to use replacement cost data to estimate the cost to rebuild the home and correct those current inequalities that we're seeing in the rating. So you have newer fixtures, houses built, you know, that are bigger, or hopefully built elevated, and so there are some minimized risks there, and so hopefully the insurance is going to reflect that. But the other thing they're looking at too is the risk factor and the elevation of the structure. Right now, we have to have elevation certificates for everything, and elevation certificates are not always the answer. They're looking at now going to use technology. We have LiDAR data that is accurate into probably about 5 or 6 inches to estimate the elevation of houses. As you can see here in this illustration, we typically have certain types of construction in areas, they'll either be all, mostly slab, or they'll be mostly crawl space. And with those, they can estimate the elevation of a building. So they're going to be using technology as a way to do insurance rating in the future. So they'll be doing away with elevation certificates for the most part, but not completely. If you disagree with your rate, you could probably get an elevation certificate. There'll be a process in place that you can still get that elevation certificate to appeal that rate. But these are all really basically the elevations we capture right now in the elevation certificate. So they're trying to incorporate new technology, a new rating methodology to come up with something a little bit more fairer. Currently, they've got it tagged as Risk Rating 2.0, and I've been pleased to be part of some of the subcommittees and with FEMA to help them develop their new approach. So the timeline for the Risk Rating 2.0 is right now they're kind of developing the approach. They're now, the next phase, that began in April this year, is they're developing the rates, and the goal is for first quarter of next year, by the end of the first quarter of next year, is to announce what the new rating structure is going to be. And then they'll have to publish the rates for 6 months. And then they'll deliver those rates, and the actual release will be in April of 2020 is the goal. So it's a 4-year process, and it's going to, it's going to be a big overhaul and a big adjustment for both insurance agents and insureds in the process. So that's what's going on with the flood insurance program. And finally, after 50 years, it's time for a change. We have South Carolina mapped updates. Kind of want to let you know what's going on. We have Berkeley County that is becoming effective in December, and that includes all the municipalities. Camden County, Fairfield County, Kershaw County, Lancaster County, and Sumter County went effective in September 28th. Edgefield County, McCormick County, Edgefield, McCormick went September 14th. Abbeville and Aiken went on August 18th of this year. Lexington County was July 5th. Anderson, Colleton, Pickens, Oconee, and Richland were December of last year. And the only reason I'm pointing this out to you is we're coming up on 1 year. People in these counties who do not have a flood insurance policy in place, and this is particularly important if you've got listings in these counties, that people buy a flood insurance policy now. That policy is going to be is assumable to a buyer, is transferable to the buyer. But the key is, we're going to talk about something called newly mapped in just a minute. If they don't buy that policy within 1 year, they lose the ability to buy that policy at a really cheap rate. That cheap rate is now going to be locked in for 2 years. And of course, we have Dorchester County here that was done of July of last year. So when you're looking at flood map changes, the impacts on insurable buildings are a couple different, about 5 different things. One, there's going to be no change whatsoever. There'll be no change in flood insurance rate map, no zone change, no base flood elevation, so they really won't see a difference. The second change that could happen is you could go from a low risk or moderate risk area into a low risk. So we've got BC or X zones are what we call low risk. We have high risk zones where you have A or B, you could be moved in or out of one of those. We have something new that's appearing in South Carolina for the first time. They're called coastal A zones or LIMWA zones. If you have a CRS community, those structures being built in those communities will be required, if they're in a coastal A zone, to meet both the A zone and V zone standards, which means they'll have to have both breakaway walls and openings in that zone. And it'll be a very narrow strip between the oceanfront properties and the standard A zone. So that's something new that you'll be seeing on the maps. Base flood elevation could change. It could go up, it could go down. And there's a change in the vertical datum this time. The maps were previously done in the North NGVD, and that's National Geodetic Vertical Datum. And they're changing now to the North American Vertical Datum. You won't see the difference. So there's really nothing there that you're going to see based on the maps. The elevations will look slightly different. They'll be up or down by just a tenth based on that datum conversion. And there is a tool to process that datum conversion for you through the Corps, or you can contact us. We'll help you with that. But you're really not going to see anything. But for a newly mapped procedure is what we talk about. If they're eligible, if they obtain flood insurance within that 12 months of that revision date, if they've been in a zone X, B, C, or X, and they're moved into an A or a V zone, they can buy that policy within 12 months and they will get a reduced rate for their flood insurance, and they can keep that coverage for 2 years before gradually being increased over a 5-year period. Now, that kind of eases them into buying a flood insurance policy. This is a real incentive for buyers. If you're buying a property and they have a newly mapped policy that you can assume and you can keep that policy in place for 2 years, that is a big savings. If we don't have those policies in place and that 12-month period has expired, then we're looking at whether, the cost of being rated with an elevation certificate. That is going to be much more expensive. Or could be much more expensive. So what's the average cost of a newly mapped policy? They're going to give you the preferred risk rates. So you're really looking at anywhere from $450 to $524 is what the policy is going to cost you for the first 2 years if you buy it within 12 months of the map date. This slideshow will be available afterwards, so you can review it and figure out when your 12-month time frame is if you missed it. But that's going to be a key to making property transfer easily. This just gives you an example here. The rates have slightly changed, but you can see they're going to stair step your rates up on year. This just changed, and I haven't updated my slide, but you'll get that PRP rate for 2 years. So if you buy a policy before those maps change, for those in Horry and Charleston County, your maps are going to be going into effect hopefully in April. They've not released the date yet, but for those people in Horry County and Charleston counties, if you are scheduled to go from an B, C, or X zone into a zone that begins with an A or V, it is absolutely critical that you purchase a preferred risk policy before those maps go into effect. And remember, it takes 30 days for that policy to go into effect. For a newly mapped policy, the effective date is 1 day. So it goes in the day after, so you can comply with the mortgage lender's requirements. But for a preferred risk policy, it's going to take 30 days. So don't wait to the last minute to buy that preferred risk policy. That would actually give you 3 years of really cheap flood insurance. If you want to know if you're in a flood zone or not, you can go to my website. You can also do your own quote. Just go to bfloodsmart.com, click on what's my flood zone, and it will give you what we call a standard flood hazard determination form. This form here lays everything out and tells you what flood zone the property's in. You're welcome to use this for, to verify your listings. Flood maps do change, so please recheck your flood zones once they are released. I have seen listings that say the property is not in the flood zone and the maps changed 6 months earlier or 3 months earlier or last month, and the property is now in the flood zone. So the flood insurance would be required by the mortgage company, but the listing saying no flood insurance is required. So please make sure you update those listings because that can delay your closing. So before you list a property, there's a couple things you want to know. Disclosure forms don't tell the whole story. You need to ask, additional questions. You may want to ask to see the prior owner's disclosure form if that's available. The prior owner may say, I had a flood. Or I had some water damage or whatever, but most people will go off what they know rather than what they've been told secondhand. So if they don't have that direct experience, they may not disclose the whole story. So asking to see the prior owner's disclosure form is not a bad idea. If you can get that or have access to it, that would be great. Did anyone in the house receive disaster assistance? That is not on the disclosure form. That's important to know because that's a key indicator if the house was damaged to the point where it was unoccupiable, potentially by flood. And that could also affect the insurance rating. Have there been any prior flood damages or flood claims? That's an indicator as well. You also want to ask if there's been a prior flood insurance policy and why it was dropped. Why is there not one now? Why did they allow that policy to lapse? That's also another key indicator. So I'm going to share a story with you and why it matters. Prior flood claims, every policyholder will receive a letter disclosing prior flood claims. That's not necessarily going to disclose all water damage. You want to ask them if they have received such a letter indicating whether or not there were prior flood claims. This goes into what we're going to talk about in a minute called severe repetitive loss. So we want to know what the claims history is. Repairs to flooded homes. Water breeds mold. This is a client of mine who said he had no damage in the house, that the water only got up to along the baseboard, and where you see the watermark along the drywall there, that was where he hosed out the garage. I said, I'd be really kind of just curious to see if, what was behind that wall, since it did get in there. He said, no problem. My contractor's coming in 2 weeks. It will be, no big deal. We're just going to wait for him. And I said, well, I'd be really curious. I just want to, break that, since you're going to demo it anyway and put in flood resistant materials, I'd be really curious and I'd want to, just take off that baseboard and see see what's there. So he did. And this is what he found. He had no idea. When he said when he broke through that wall, he could smell it hit him in the face like a ton of bricks. This is black mold. This is what he was smelling in the upper portion of his house. He's a fully elevated building, but he was smelling this black mold upstairs and he didn't know what it was. And this is what you see. So damage can be hidden. You've got to use more than just bleach. Bleach alone is not going to do it. You've got to get specialized mold products. A lot of companies will come in and they'll be, do remediation where they cut 1 foot above or 2 feet above the watermark and they dry it out and they'll spray it. That's not enough. You want to make sure that you have an air quality report to offer buyers to show them that there are no mold issues if you've got a property for sale. In addition to that, you want to do the air quality testing before you write that final check to the remediation company. You would be surprised the number of air quality reports that are not good and the remediation company is gone. So it's really important that you get the air quality reports. You can pay them half and tell them you'll get the rest when it passes the air quality test. But it's critical that you have these air quality test reports done, because just like my client who didn't think he had a problem with mold, he would not have passed an air quality test. There is mold there. It's just not visible sometimes. It's hidden behind the walls. So again, this is especially important if the water gets up under a crawl space. Even though it didn't get in the house, mold can grow under a crawl space. So it's just important that we get these air quality tests, especially if there are any odors or anything that just doesn't look right. But this is black mold, and it's better to find out before you sell the property than after. If you sell the property, and Byron can address this at a later date, but if someone buys a property that was not properly remediated after a flood, there could be consequences down the road for the sellers if it wasn't properly disclosed or taken care of. Repairing flood damage, you always want to use flood resistant materials. Do not use drywall and do not use painted wood. Those types of improvements or repairs affect your insurance rating, and they cause you to have repeated claims. The gentleman who I showed you who had drywall and busted through it and found black mold, he's putting back the wall using masonite, which is a cement board, and he's using screws. So after the next flood, if he gets any water in his garage, he will be able to unscrew the masonite, let the wall dry, treat it, and put the wall back with minimal impact or cost. So you also want to make sure that you use materials that are flood resistant, and pay attention to what affects insurance rating. Painted wood and drywall kill insurance rating in an enclosure. So looking at this structure here, this is fully credible. If you look at this, you see, gee, it looks like painted wood to me, or it looks like you've got carpeting here. You've got what looks like drywall. This gentleman was paying $26,000 for his flood insurance. We gutted his enclosure. This is his entrance foyer. And we gutted it, and we put in flood resistant materials. What you're looking at is masonite that's been painted. You see flood vents in the photograph to the right, so he has proper venting. And the trim that you see is not wood, but a PVC material. So there are materials out there. The crown molding and all that is all PVC. So there are materials out there that are flood resistant that will qualify as not finished for insurance. So this is fully compliant and will give you insurance credit. Drywall and painted wood would have this as a slab on grade building. Now that this guy is fully compliant, has openings, he was paying over $26,000 a year. His new premium, I think, is $890. Big savings. So with flood insurance, you want to do your homework. Sellers have to have their policies reviewed by an expert. You want to make sure the policy is rated correctly, and you want to make sure that some home improvements haven't destroyed the insurance rating. A lot of people at the beaches like to put in bathrooms down below the elevated floor on that ground level. And depending upon how that insurance is rated for that building, it could actually make the flood insurance more expensive, but it's not going to get discovered until the building is sells and the new underwriter reviews everything. When we go through transfer of policies, we have to have new photographs, and everything is re-underwritten at the time of transfer. So whether you have a new policy or you do an assumption, everything's going to get looked at. You can't hide anything anymore. One thing to know is that flood insurance policy at closing is a non-binding quote. You know, everybody says, well, I paid $2,500 for my closing, and this is actually one of my clients. She paid $2,500 at closing. 30 days after closing, the company says, whoops, there's been a mistake. Send us another $9,000 for a total annual premium of $11,500. The agent made a mistake on the application. Well, actually, everybody made a mistake, because when we did the quote, we actually did the policy, and she paid off her house and canceled that policy. The actual premium was a little over $1,700. So everybody made mistakes. They didn't know what they were looking at. So it pays to have, understand that what you pay at the closing table, if the agent made a mistake on the application, it is a non-binding and they can charge you more. The realtor on this was not in South Carolina, but I did reach out to the realtor because he recommended the insurance agent to the insured, and he wouldn't return my phone call. Odd. All right, so example of finished, unfinished enclosure. This is the example I was talking about. It was actually $801 was the enclosure. We were able to grandfather him once he got the enclosure fully compliant. Amazing, that kind of savings. He got a $25,000 refund, and his brother-in-law was his insurance agent until then. So I told you we were going to talk about severe repetitive loss. Severe repetitive loss is a property where we have a standard flood insurance policy, and we've had claims where we had 4 or more separate claim payments that exceed $5,000, and with cumulative claim payments that exceed $20,000. So it could be $4,000 or $5,000 claims, but they're not going to count any claims less than $5,000. The second way to be classified as a severe repetitive loss policy is to have 2 claims payment where the cumulative amount of the claim payments exceed the fair market value of the building. What is fair market value? Fair market value is, you guys are very familiar with that, what a buyer is willing to pay for a structure on the day, and we're looking the day before the loss occurs. So on the day before, we'd have to have a time and place appraisal if you wanted to appeal this, but that is the fair market value. So you'd have to have at least 2 claim payments exceeding that. But once you hit that 4th claim payment, remember we were talking earlier about asking about the number of claims. We want to know the number of claims, because if they've had 2 or 3 claims on that, you want to know. I've been working with a gentleman who had there were 2 claim payments when he bought the house. He didn't understand this concept of severe repetitive loss because nobody really explains it to you. So when we had Hurricane Matthew, he made a claim of $7,000. And then in 2016, he made another claim. I'm sorry, 2016 was Matthew. So he made a bigger claim. And all of a sudden, now he's a severe repetitive loss property. And so flood insurance is getting quite expensive, because thanks to Biggert-Waters, his rates are going up 25% a year. So severe repetitive loss properties, those rate increases are 25% a year. So you very quickly, the insurance gets very expensive very quickly. He's now paying over $6,000 a year for his flood insurance. Luckily, he was smart enough to apply for a hazard mitigation grant through the process when he registered for disaster assistance. And he's getting, his structure will be elevated. Once you're designated as a severe repetitive loss property, you're going to go through underwriting review. So if you've got that bathroom that you added, the first year could trigger you to have a rate greater than increase, that 25% increase that first year. Could be 50%. But they're going to make sure your policy is properly rated, and those rates will climb 25% a year until the elevation certificate rates are achieved. So you're gonna have to get an elevation certificate, and your rate I had one client who would actually save $2,000 by using the elevation certificate rating. So it just depends on where the structure is and how it's elevated and how it's currently rated. But that severe repetitive loss designation is really important to know if you're buying a house, how many claims they've had, because you want to know if you make that last claim, if you make one claim, are you going to be in this category? These policies are transferred from the write your own carriers such as Allstate, National General, Hartford, into what we call the Special Direct Facility, and they are managed by FEMA every year. Claims reporting lags 6 to 12 months, so seller disclosure is absolutely critical. So if you've got a property that's been on the market, you want to make sure you've got an updated seller disclosure statement since the flood. Mitigation grants are available. We talked about the things you can do. They have ICC money, increased cost of compliance if they had a flood insurance policy, which is up to $30,000 for flood proofing, relocation, elevation, or demolition. We've got precedent to declare disasters in South Carolina, and I have 2 clients who have got taken advantage of this. We got them through the process and they were selected. They're both severe repetitive loss properties. One is doing a buyout, the other one's doing one's not doing buyout. One is doing elevation, the other one's doing demo rebuild. Well, what is demo rebuild? Demolition, reconstruction. Coastal properties are so expensive that we cannot afford to buy the land and the house. So you can do a demo rebuild, and FEMA will give you up to $100 or $150,000 to demolish your current house and build a new one. You can, if you go through that disaster assistance process, you can get an SBA loan, and SBA will give you money to build the new house or to accomplish the mitigation, whatever you choose, in addition to what your insurance is paying. If you're interested in one of these mitigation grants, you've got to be patient. It takes about 2 years to go through the process from application to selection. So it requires an inordinate amount of patience, but it's going to be well worth it in the end. If you've got questions about this, feel free to call. I have a client who got an SBA loan, and SBA is critical, for this process to help you to meet those unmet needs financially. You can get a low interest loan. She got a low interest loan to rebuild her house, and the house in her same neighborhood became available for sale. And she was able to use the money that she was going to repair her home with to buy that new house with SBA funds. So it's very flexible as well. But take advantage. It's cost about $15 to $18 per square foot to elevate a house, and then you've got to build a new foundation. So it can be cost affordable. Slabs, was a crawl space house. Slab houses are more difficult, and they may be ones that we want to do, different options such as demolition, reconstruction. And people just may say they've had enough. But advice before you list and after Florence. You want to buy flood insurance before you list the property. That way there are no guesses. There's no uncertainty and no unnecessary delays in closing. The buyer knows exactly how much the flood insurance is going to cost, and that policy is transferable. Offer potential buyers an elevation certificate. That elevation certificate is very helpful for them to understand the risk in relationship to the structure. You want to know the claims history so that you can communicate that to buyers if they ask. I mean, it's not a secret that we had a flood and a disaster in South Carolina. You want to ask questions if you're representing either the buyer or the seller. You want to ask questions of the seller if you are representing them, and if you are representing the buyer, you definitely want to ask questions about prior claims history, prior flooding, whether or not they had flood insurance, why they don't have flood insurance policy on the house, all sorts of things. Because you want to get down to get the answers for your client. Could be that the flood insurance is so expensive they just finally dropped it. And again, beware of the Saturday night specials. And that is where people offer you a cheap quote with high deductibles, or in V-zone properties built after 1981, you want to make sure these replacement cost value is correct. These are all things that, you know, some companies I've seen have used to get really cheap rates, you know, quotes to get you in the door, but then 30 days after closing, you find out, gee, I'm going to owe more money. So this is one of the things you want to pay attention to, is just make sure you're reviewing these quotes to make sure that they're not really high deductibles, that, you know, that they're quoted in such a way that your client is going to be able to afford them, and make sure that the replacement cost value of the structure is correct. And if this is you struggling with flood insurance or the National Flood Insurance Program or disaster assistance or any of these things, please feel free to call me. You know, we're here, you know, to help you figure it out. You don't have to navigate these waters by yourself. So happy anniversary to the National Flood Insurance Program. You know, we've got private flood options available these days. You know, one of the things I'm finding about private flood in South Carolina is it's sometimes more expensive than the National Flood Insurance Program, simply because they don't use the flood maps. They're looking at the frequency of the flooding events we're having currently and the proximity to water. So if we have, I have one property that's located in zone X that's 11 feet above the base flood elevation, but the insurance was 3 times what I could buy it for the NFIP, simply because of the proximity to water. So with this, I'm done, and I'd like to thank you for having me today and for joining us, and I would like to open it up for questions.
All right, thank you, Lisa. We're going to take a few minutes to see if anybody has any questions. While we're waiting, I'd like to remind everybody that this webinar is being recorded, and it's going to be uploaded this afternoon to our website at screaltors.org/webinar and to our YouTube page at youtube.com/screaltors for viewing purposes for people who couldn't tune in or people who had to leave early. And it does look like we have a couple questions. So Lisa, the first question says, it seems that each time we have asked a buyer if their policy is assumable, the answer is always no. Are all policies supposed to be assumable?
Yes, they are, with the exception of USAA. If it's an NFIP backed policy, the policies are assumable, with the exception of USAA. They would have to qualify for USAA. I'll give you a little hint. The reason why insurance agents don't like assumable policies, because we earn our commission on the date that the policy begins. So if we have an assumable policy, we don't earn any money until the policy comes up for renewal. So a lot of people don't want to, or they're afraid they're not going to get reimbursed. When the policies are assumable, that money transfers hands at the closing table, just like property taxes. It's done on paper. The seller is reimbursed through the closing documents, and the buyer pays their premium on the table, just like they do property taxes. It's all prorated, but all NFIP policies are transferable and assumable, except for USAA.
All right, next question is, when does Beaufort County get the updated maps?
I'm not quite sure what their schedule is. Everything along the coast has been delayed. It's supposedly be sometime in 2019.
All right, and the final question I see here is, when will the new FEMA maps be available?
If you're in Horry County and Charleston, it looks like the maps will be available in April. You can check the schedule by going to the Map Service Center at msc.fema.gov and pulling up that county's information. If the letter of final determination has been issued, there'll be a letter there explaining that. Or you may contact me.
All right, the next question says, did you show Georgetown County as changing?
I did not show Georgetown County as changing, because I don't have that date yet. I don't recall.
All right, and it doesn't look like we have any more questions. Once again, this webinar is being recorded with the commentary, and if you would like the presentation that Lisa has been showing today, feel free to reach out. You can either give her a call or shoot her an email, and she would love to forward this PowerPoint to you so that you can take a closer look at the maps and the dates. So I just wanted to thank you so much for coming in today, and wish everybody a fantastic afternoon.
Thank you for having me.